I'm still bullish on Bitcoin. In the fourth quarter, seasonally, Bitcoin's strong, but now we have the Fed flipping dovish after being essentially hawkish all year. That's a tailwind for Bitcoin. So I think Bitcoin gets to 200 to 250,000 by the end of the year. And that aligns with Mark Newton's technical targets. Ethereum, as a price ratio to Bitcoin, should recover to its prior, let's say, either average or at least 5-year highs, okay? Mm-hmm. Using a $250,000 Bitcoin, that implies somewhere between 10 and 12,000 for Ethereum by the end of the year.
The fourth quarter of 2025 could be a turning point for crypto. Bitcoin's seasonal strength is kicking in, the Fed is easing, and liquidity is flowing back into market. Price models now point to $250,000 for Bitcoin and $10,000 for Ethereum by year-end. After months of sideways movement, this could signal the next major crypto breakout, according to Tom Lee, co-founder and head of research at Fundstrat. This week has been far from dull. Bitcoin remains strong near the top of its range, while Ethereum gains momentum after months of consolidation. Behind these steady prices, the industry is seeing major developments. Institutional investors are starting to adopt blockchain for real financial operations, and tokenization projects are expanding, turning traditional assets, from bonds and real estate to intellectual property, into digital tokens that move instantly across networks. AI is also beginning to integrate with blockchain, enabling new automated economies. Stick around until the end of the video as Tom Lee shares how Bitcoin and Ethereum could enter their strongest phase yet this year. Still paying taxes on your crypto gains? What if you didn't have to? With ITrust Capital, you can buy and sell crypto inside a tax-advantaged IRA, giving you a smarter way to grow your portfolio without worrying about capital gains tax. That's why they're the #1 crypto IRA platform in America, with billions in tax-advantaged transactions. There are multiple ways to fund your account. You can make a contribution, transfer an existing IRA, or roll over an old 401k or employer plan. You'll get access to a wide range of digital assets, low fees, and 24/7 trading, all backed by secure, one-to-one asset ownership with institutional-grade custody. And if you have questions, ITrust Capital offers 100% US-based customer support with real people ready to help. Click the link, use code DOSE7, and get your $100 funding bonus today. Start building your crypto wealth, tax-advantaged, with ITrust Capital.
In our view, Ethereum probably is a chain that had become underestimated. It made its all-time high 5 years ago. So when we started the treasury strategy, Ethereum was around 1,300 and its all-time high was around 4,800. But that was a case in our minds where Ethereum's fundamental story was much stronger because number one, it is the second largest blockchain. It's the largest smart contract platform. It has a huge community of developers that, in my opinion, are really benevolent focused. Ethereum is trying to improve the world. But I think people thought of it as less exciting than other platforms. But then along comes not only stablecoins, which we call the ChatGPT moment for crypto, but it's really the realization that this current administration in the US, the White House and Congress, are really becoming pro-crypto, and Wall Street itself is embracing blockchains. And the blockchain they're doing most of the work on is Ethereum. So when I look at that combined with AI and tokenized agentic AI and robots are really going to create the need for a token economy for robots. A lot of that will happen on Ethereum. In fact, President Trump today just talked about how he needs proof of human to protect us, and a lot of that work is going to be done on Ethereum. So you have two drivers for what we think are a super cycle. So to us at 1,300, Ethereum was kind of like a massive risk reward.
Yeah, we're going to get into more price targets at the end, but I guess on the stablecoin pieces, we've seen other stablecoin-centric chains launch. I'm just curious if that's changed your thinking around the opportunity for ETH, since now we've got Stripe working on their own thing, you've got Tempo, we just heard from USDC. There's just a lot kind of eating into that share. I don't know if that's the way that you see it or not.
Well, it's a big market. I mean, stablecoins are just tokenized US dollars right now. But we're going to be seeing tokenized equities and credit and real estate and loyalty points and intellectual property intellectual property is the largest component of U.S. CapEx. That should be on-chain. So is it a $400 trillion market and stablecoins are $280 billion right now? I think that there's room for plenty of blockchains to benefit. But I do think the idea of a fat protocol is important for people to keep in mind. That's what Union Square Ventures first wrote about. I don't know if you guys remember from 2011 or 2013, but as stablecoins are created on a layer one, that layer one captures the value. That payment rail concept is the exact same reason banks, as you put a deposit in, the value of the company actually equals your deposits because they make a loan with that deposit. So I think in many ways there'll be room for many blockchains, but the majority of this is taking place on Ethereum. And I'm not going to throw shade at any other layer ones because I do think there's room for multiple, but Ethereum is a truly neutral chain. I don't think anyone ever feels that someone's got a fat finger tilting it in their favor. If you think about how Wall Street operates, they will only want to do and operate on a neutral chain. If one of the banks creates their own layer one, calling it, I don't know, too big to fail bank, layer one blockchain, no one is going to feel that's a neutral blockchain because that's going to always tilt it in their favor. I mean, that's just how Wall Street operates today. If a bank is the axe trading a bond, they have perfect information and they use that against anyone else that trades it. So I think it's important for Wall Street to find a public blockchain that's neutral, and today the biggest one is Ethereum. I think part of it is the digital asset treasury world bridges two worlds. One is crypto, because it invests and buys a token, and so you have to be able to speak the language of the crypto economy. But then the other world that treasuries sit in is public equities. And remember, there's 5,700 stocks out there, 5,700. So just because a company does something doesn't mean the market cares. If you look at the stock market today, the top 30 most traded stocks are literally the only stocks that Robinhood cares about, or Schwab, or even JP Morgan. JP Morgan trading probably only cares about 10 stocks, and Goldman's desk only cares about 10 stocks. Institutional investors care about sector exposure, but they always buy the leader. So, MicroStrategy is one of the most liquid stocks in the market today. It trades $3 billion a day. Fortunately, Bitmine is one of the most liquid stocks today. It trades about $3 billion a day. It trades about as much every day as JP Morgan or Arista Networks or Google. We're really one of the most liquid names. And then I learned that in Korea, we're top 1, 2, or 3 in terms of trading volume. So I think that unless you're going to break into the top 30 as a stock, institutions may not pay attention because institutions want to have volatility, access to hedging through option chains, and Bitmine's a top 10 chain. And so if you're not in that zip code, institutions aren't going to pay attention.
Ethereum has been underrated for years. Even without hitting new highs since 2021, its network has quietly become the backbone of modern blockchain development. Each upgrade has made it faster and more efficient, while thousands of developers continue building tools, apps, and digital assets on top of it. What's changing now, Lee notes, is that traditional finance is finally paying attention. Banks, investment firms, and even government-backed institutions are using Ethereum for tokenization, putting real-world assets like stocks, bonds, or property on-chain so they can be traded instantly. Lee compares this to the early days of Wall Street, when financial systems centralized around trusted common rails. He emphasizes that Ethereum and Bitcoin aren't competitors, but complementary parts of the same transformation. Bitcoin serves as digital gold, a store of value, while Ethereum provides the digital infrastructure that enables financial activity. This synergy is why Lee believes institutions will need both to operate in the next era of finance.
So Michael Saylor is a very good friend of mine. In fact, I spent a lot of time explaining to him and thinking around Ethereum and Bitcoin, and I think we agree Bitcoin and Ethereum, first of all, are friends. We don't compete. But that our strategy is very different. I'm not competing. Bitmine is not trying to get an institution to buy us over MicroStrategy. In fact, we think an institution that owns MicroStrategy also has to own Bitmine because we are different parts of the crypto economy. Ethereum, to me, is the new Wall Street. In 1971, the dollar went off the gold standard. Okay. Now, everyone thought in 1971 the play was gold. But actually, in 1971, the dollar became synthetic. It no longer was backed by anything. And that's when Wall Street stepped in and said, okay, we got to make sure that the euro, the German franc or whatever, German mark or the French franc doesn't become dominant. So Wall Street built products to make sure everyone used a synthetic dollar. Wall Street was the big play in 1971. In 2025, we're making everything synthetic. We're starting with tokenizing the dollar. And then, as you know, Wall Street's going to tokenize equities and everything I just listed. Massive opportunity. Ethereum is in a super cycle because of that. But Bitmine can play a role because it can become a payment rails. It could become almost a bank. It can help by owning the largest holder of Ethereum today. It's a kingmaker on the DeFi. We were doing moonshots. We invested $20 million into 8Co, which is investing in the WorldCoin, and that already, in just less than 10 days, has already returned more than 10 times our investment. So I think we are becoming a financial infrastructure company. I think that it's going to be important for other Ethereum treasuries to be differentiated. I do think there's room for more than one, but the market is also picking winners and losers. Bitmine trades $3 billion a day. MicroStrategy trades $3.4 billion a day. I think the two of us represent 95% of all trading volume in the DATs. So if you look at the hundreds of DATs, the two of us are 90% of the trading volume. That means institutions really only want to buy us. In terms of total market cap, we are basically a large cap stock now. So we're going to be part of a lot of these major indices when they rebalance, which means we'll have passive flows. That really helped MicroStrategy too. And that's actually what sustains valuation premiums because now you have someone who's buying every day.
We've gone deep into the weeds on the market side. I do want to back up and ask one question around the idea of it kind of being like a trade-off. I wonder if you agree that it's kind of like a Laffer curve where, since ETH is all about decentralization, if there does start to be diminishing returns, if someone controls too much of ETH, maybe, if it ever gets to that point, if you think that's one thing.
I've actually spoken to some researchers about this. Like, what's too much concentration? 5% is where you get a power law benefit. Not that, it starts to break down. These same researchers have actually told us that it's pretty safe to go to 10% of Ethereum. And as you know, Ethereum, no one controls it. If some entity owned 10%, and of course that entity is a permanent capital vehicle and is going to be staking and doesn't want to get slashed, so they're going to make sure they're validating properly. I'd actually think it really secures the network because now all of a sudden a DAT, by the way, is completely decentralized, right? It's owned by shareholders. Like Bitmine has 270,000 shareholders. That's actually who controls Bitmine. It's not centralized. It is actually, I'd argue, a way to ensure perpetual decentralization because now the shareholders own Bitmine, they control how the stock does, and if the stock's valuation gets weak, then the DAT loses its ability to, raise capital. So it's truly decentralized.
But how do you see this all playing out? Where does ETH go even at the end of the year?
Well, a lot of it starts with our views on crypto. And, I'm still bullish on Bitcoin. In the fourth quarter, seasonally, Bitcoin's strong. But now we have the Fed flipping dovish after being essentially hawkish all year, that's a tailwind for Bitcoin. So I think Bitcoin gets to 200 to 250,000 by the end of the year. And that aligns with Mark Newton's technical targets. Ethereum, as a price ratio to Bitcoin, should recover to its prior, let's say, either average or at least 5-year highs, okay? Using a $250,000 Bitcoin, that implies somewhere between 10 and 12,000 for Ethereum by the end of the year. But I do think Ethereum is going to exceed those prior highs, and that's why I think when we get to 12, 15,000, that's what you call, real price discovery, but I don't think that would be the ceiling for Ethereum.
I'm not saying that it's going to be straight shot in the next 5 years, but how do you kind of see it getting there?
Yeah, some perspective. In 2017, Bitcoin was under 1,000, and we thought it would get to 25,000 by 2022, but could get to 100,000 a little bit later. Of course, 8 years later, Bitcoin's over 100,000. To us, an intermediate level for Ethereum is matching Bitcoin's network value. So I think a couple years from now, so that would be 60,000 ETH.
Tom Lee describes 2025 as potentially one of the most dramatic financial shifts since the 1970s. When the dollar broke from gold, it launched a new era dominated by credit, leverage, and Wall Street innovation, shaping the system we know today, driven by synthetic dollars, derivatives, and debt-based growth. Lee believes we're now at a similar crossroads, but this time the transformation involves moving global value onto blockchains. From currencies and stocks to real estate and even AI-generated intellectual property, everything is being digitized into tokens that trade instantly and transparently. In his view, Ethereum sits at the heart of this revolution. Just as Wall Street became the gatekeeper of the post-gold era, Ethereum could become the infrastructure of a tokenized world. If Ethereum succeeds, it won't just mirror Bitcoin's rise, it could reshape how capital moves. In Lee's framework, Bitcoin is digital money, while Ethereum is the digital economy built on top of it. The outcome of this shift could determine who controls the next century of global finance. Do you think Ethereum will claim that role, or will another network challenge it? Share your thoughts in the comments. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.